Welcome to the Brave Money Podcast, Season 2, Episode 1. This is titled Fundamental Analysis. I'm Leon Gabon, and with me today is Frank Makrides. Hey, Frank, how's it going?
It's going great, Leon. Thanks for having me.
Yeah, and likewise. Yeah, great green markets today. Um, so we're both investors and traders, and I kind of wanted to give the audience like a sense of like, okay, well, what are the ways you do research, right? So I think there's been mostly two ways. That's been fundamental analysis, looking at a company and doing some research there. And then there's technical analysis, which is you look at the charts and you try to like, read candlesticks and patterns and stuff like that to kind of determine a trend. Um, Maybe value investing is another way, but then Chris Camillo pioneered social arb, which is another way. But today we're going to focus on fundamental analysis, which is, I presume that's your favorite style of stock research.
Yeah, it's my go-to style. I try to combine that with technical analysis, but um, really understanding the companies, understanding who I'm investing in from a leadership standpoint, financial standpoint, product projections, cash on hand, all those different types of things. I think to me, it just gives me another level of confidence as part of the decision making process.
Gotcha. Cool. What would what's are there core tenets in fundamental analysis? Like, okay, do we look at company earnings compared to previous years? And then would something happen like something the CEO does that's crazy? Would that count as fundamental analysis? Yeah, I'm just curious your thoughts there.
Yeah, so for me right now, I'm if you want to categorize me, I'm a growth investor. So I like to find undervalued companies or companies that have the potential to 4 to 10x over a given window of time. I would consider myself more of a long term investor. I do swing trade, I do those things, but my core holdings before I execute on a trade and acquire shares or have a plan to acquire shares or build a position. Um, my selection process is I have a high level of conviction that this particular investment is going to give me a large multiple over my investment period of time.
Hmm.
So before I even jump into it, I know what I'm doing, how much I'm going to buy it at what price, and then what my exit plan is. So, sometimes it's okay when I 2x, I take my cash out and repurpose my capital again. So it's all dependent on a company by company basis. Um, so for me, it's I always like to buy. Typically, if I can find a leader or a disruptor in a particular industry or a
Hmm.
particular theme. So someone that is an emerging company, a fresh company that is, let's say a fintech that is taking on banking could be a perfect example. SoFi IPOE is a good example of that. So someone that's going after your traditional JP Morgans, Wells Fargo's, and those types of things. So what I first like to do is understand, okay, who's running this company,
Hmm.
and the leadership of the company to me is probably one of the most important pieces when it comes to this. So if you want to think of visionaries, people that have disrupted over time and have taken their businesses to levels that we can't even fathom, um, those are going to be your Steve Jobs, right? They're going to be your Bill Gates. They're going to be your Elon Musks, like these
Hmm.
family names, Jeff Bezos, right? And then if you look at all those companies, right, what do they all have in common? They all reinvented themselves, or they all had multiple revenue streams, right? So when you look at Amazon, they had a marketplace, they have cloud, they had all this stuff, and you saw that in its earliest days, and then it just took off. Same
Hmm.
thing with search with Google and all. Having operating systems and different types of suites of software all over different types of ecosystems, right? So those are the things that I start with. Okay, so who's the leader? Um, are there potentials here for multiple streams of revenue? Um, are they going to be or potentially going to become and capture market share and become leaders in a particular industry or space? Um, and are they a fast growing company with high margins? And if they're not profitable, what's their path to profitability? How quickly can they get there? What's their current cash position? Could they go back to the markets and demand more cash to sustain their current business? So that those are always red flags when they have additional
Hmm.
stock offerings and dilution and those types of things. And sometimes those are good. Sometimes you like to see that if they have a clear plan for investment. So um, so after that, once I have an understanding a little bit about who they are, then I dive into their recent financials, and all that's available. So all this stuff, if you go, if it, the easiest thing I like to do to find that information, if anyone's looking, you can go to that company's website and either like start snooping around, or sometimes you could do a simple Google search. Like, say, let's say you wanted to type in Tesla space investor relations, and then when you do that, you'll get to their investment relations page. And the things that I like to do is I like to dive into their recent financial statements that they would release to the public. Sometimes they have a presentation that goes along with it. Even better, if there's an investor call, I like to listen to that. Sometimes I might 2x the call, um, and those calls are really revealing of what's going on, what's up and coming. And then you actually get to hear some of the analysts ask questions to
Hmm.
uh, the leadership of the company. And those are very insightful as well. Um,
So with those calls, I'm curious, what are things you kind of look for? I mean, I guess there's stuff like tone, confidence, but are there like specific numbers or like, yeah. W-
uh, yeah, numbers, like have they hit their numbers, or are there some bombshells, major business pivots, any shocks to the company that were not perceived ahead of time. So, for example, uh, I just did a recent video on GoEV,
Mhm.
ticker symbol GoEV Canoe, right? Um, and they had a wowzer of a investor call where the CEO wasn't on the call. I believe the CFO resigned, and some other members of the company stepped down or were on leave, which was shocking to some of the people on the call. And then they also announced a completely major pivot of what they're doing as a business. Now, this is always shocking to investors, but early stage companies, this stuff happens all the time. It's more or less, how did they handle it? How did they prepare for the call? And what can you take away from that, and what would be the next steps if you were an investor considering investing? So
Mhm.
those are some of the things that could come out of an investor call like that. And sometimes you would hear like an exciting new product announcement or new features. Tesla is infamous for that, and Elon is infamous for dropping uh, you know, little nuggets during his calls, little announcements, progress, and always stretching his deliveries and his schedules because he's a high achiever. But
Mhm.
you also get to hear the voice of the leadership. You get to hear the voice of the company, right? So for the first, you get to hear really what's on their mind and what drives them, and you get to hear what everyone else is interested in as well. So
Mhm.
yeah, those calls are usually very insightful. So um, I have been also learning more about social ARB as well, but that's something I'm continuously learning on and trying to capture information online of sentiment for what people think of a company. But that doesn't steer me as much as really understanding, again, leadership, uh, what their financial statements look like, what their profitability is, what their quarter to quarter and year over year growth has been, and what they're projecting it to be.
Hmm.
So that's when you start jumping into valuations for the company, right? So then you can look at it and basically say, okay, their stock price is here today. What's the price to sales if it's a high growth company, and how does it compare to its peers? Um, how far down is it from its all-time high? What's its trading volume? um and when are they, what are their sales figures looking like? If they have new factories coming online, if they have new software solutions coming online, what's their hiring plan for new employees? What's their expansion plan? um
Hmm.
so these all these little pieces, it all depends what industry it is. So obviously if it's EVs, do they have the raw materials? Do they have the batteries? Do they have the charging infrastructure? Do they have the factory capacity to sustain scalable growth? If it, so every industry you kind of have to like almost become like a mini expert. um, but if you were not an expert, sometimes you could just look at the basic numbers. Okay, so it's like, okay, this company here today is making this much revenue at during the quarter. This is how much they made in the previous quarter. This is how much they made last year. So you could see um, a history over time of how well they've done, and then you can also see how well they've done compared to what they said they will do. And a lot of times, what I find is companies that continue to beat their estimates and beat what the street is expecting them to do. Those companies are usually do much better over time than companies that miss their estimates. So those are
Hmm.
also telltale signs of how much better this company is performing than the industry or the market can perceive. And what that allows you to do is build in margin when you make your investment, because you can say, hey, they might actually outperform. They have a history of outperforming. I think they're
Hmm.
undervalued. I think they can reach this level in this amount of time. So those are just some things I look at.
Yeah, yeah, very cool, very cool. And like you said, you're very long term, kind of like buy and hold investor. And yeah, it sounds like this kind of analysis would definitely help there with something that with a company that has staying power, the power to scale with the right leadership and numbers and innovation. So so with what's your typical like length of time in like holding a stock, or is it when you reach like 100%, 200%, or some kind of like number goal?
Yeah, every stock is different, and sometimes I'm going to be really brief here. Sometimes it might not even be a company.
Hmm.
It could be, let's say, a commodity, like rare earths, as an example, like REMX, which is a VanEck ETF for rare earths, where I think that's I think a lot of people are getting in really early on this. And we know that those materials are going to be needed, and there are not enough of them for the electric car industry. That's another example. So,
Hmm.
yeah, typically I like to get my capital out of most of my investments at the 2x stage. Also, at a certain period of time, if I do not reach that level, I might say, hey, I want this stock. I expect this stock based on what the market's doing and how this company and its peers have been doing. I expect this to 2x in 6 months. I expect it to 2x in 12 months. I expect it to 2x in 18 months, or whatever my time horizon is.
Hmm.
Um, and sometimes, you know what, I'll take cash out. Maybe it only goes up 50%, but I'll take cash out if it doesn't reach those expectations, and redeploy my capital into something else where I believe it has a higher probability to reach those levels over a given period of time. Or I might just close out my position because it really hasn't performed to the level that I wanted to do. So
Hmm.
it's all about time, money, and risk reward and opportunity. So I always compare my investment in a particular stock or fund or commodity or whatever it is, or crypto or whatever the case may be. And I want to look at it and say, listen, if I don't get this return over this period of time, and there are 4 or 5 other better opportunities that I believe I can get that return,
Hmm.
and it didn't play out the way I wanted to, I'll either cut my losses, or usually I'll get out a little less that what I expected from a profit standpoint, and I'll redeploy my capital. So it's all about having a plan before you jump in
Hmm.
and adjusting your plan based on what the company and the market is doing to the best of your ability to maximize your profit.
Exactly. And yeah, I think having a plan before you get into trade, always important, um, dear listeners. uh, so fundamental analysis, I feel like that's been kind of like the dominant, well, kind of form of research for years with the stock market. But lately, the last 2 years, let's go back to 2020, and then you had the COVID event, then a lot of the Fed injecting a lot of money, and then you kind of had like this new wave of hype stocks slash social investing slash new millennial type of investor who seems to kind of like they like icons or like a theme or sending a message rather than like straight P&L numbers. This seems more like a little phase. Would you agree? And then we'll kind of come back to like a more fundamental slash social art technical kind of mean or average of analysts.
Yeah, I want to answer that in a different way
Hmm.
instead of yes or no to that. I have seen this type of market euphoria before where
Mm,
the way I want to answer it is I think we've been in a bull market since 2000, since the last crash around 2008, 2009. Coming out of that, I think we've been pretty much in a bull market. And the
hmm.
market correction that we saw last year, we really came out of that in less than a couple of months. So I really would not call that, even though by definition it did correct. The recovery was so fast; it was almost like a blip
Hmm.
in the overall time scale of markets and investments. So the way I'm going to answer this, I don't know if you're going to like this answer, but I think almost most investors, if they just made any type of investments, and this is a very general statement,
Hmm.
most even slightly educated or emotional type of investments, or really good research type of investments, um, for the most part, have done well during this bull market because you've been
Hmm.
in the middle of one of the longest bull markets we've seen in my lifetime.
Hmm.
So you're talking a bull market now that's well over a decade strong. So that's already against the typical trend.
Hmm.
And I remember seeing this during the the telecom cycles that I lived through, where there was just crazy euphoria. I mean, and none of the valuations made sense. And
Yeah.
people, it didn't matter what you picked. Everyone was a stock expert. Everyone was a
Hmm.
genius. Um, these are the earliest days of the internet and stuff like that. We don't have all the social media tools and everything we have today, but everybody looked like a hero. Everyone was a genius. Everyone was a stock expert. Everyone was a guru, right? So
Hmm.
during those bull markets and during those bull runs, uh, a lot of people can come out looking like geniuses, but
Hmm.
when push comes to shove, at the end of the day, the companies that do come out and do survive and do thrive over time are the ones where you did the right research, you did do the fundamental analysis to the best of your ability, and that gives you the best shot moving forward, along
Hmm.
with riding the momentum, along with riding the social arb, along with riding all that. Of course, all of that helps, but if the company is so far off from base reality, then it's just not a good investment.
Hmm.
If the markets come back down to some normalization, you could get potentially wrecked. And I've seen that happen multiple times in the past. So that's my 2 cents on that. I mean,
Yeah. Yeah.
markets could rise all ships, right? If you
Hmm.
throw enough at it, it can lift almost everything. So
Yeah. Yeah. I wasn't really active during the dot-com boom, but I heard stuff like, yeah, like you just had a website and all of a sudden you could raise money. Like pets.com, I think was one of the more famous things that blew up because and that was probably because the internet was just it wasn't ready. Broadband wasn't ready. All these services that we have now, um, just wasn't ready back then.
Oh, I'll give you an example. I worked at Cisco Systems. I
Mhm,
had stock options at Cisco Systems that were given to me at the time. One of the hottest companies back then. This was during telecom. I'll just give you one example.
mhm,
I could give you many, but I'll give you one. My stocks at that time, my options, exercising all them, they were given to me at that time. I think the stock price was somewhere around $65 or $68. It's just off memory.
mhm,
Cisco Systems in over 20 years plus, I don't even know how many years it's been, 20 plus years, has never got back to those price levels.
mhm,
Think about that. Huge multinational, big company, still hasn't recovered from that. And it took, I don't even know how many years from Amazon coming out of the .com cycle to ever get back up to those levels that it once was. I think it was like something like 6 or 8 or 9 years for Amazon to recover. And again, I don't remember these. I might be off by time scale here, but the point is that when these markets, when you have euphoria in markets and they do correct pretty hard.
mhm, mhm,
And that's just something to also take into consideration. But I think investors are also a little bit smarter now. I think the tools and the resources that a lot of investors have available are superior. I really don't want to compare today to 1999. I mean,
mhm.
at your fingertips today, and I'm not saying there are a lot of sophisticated investors. People know what a market cap means, right? People
Mhm.
know what price to sales or P or forward PE or any number one of these basic, pieces of evaluation terminology are. So I think investors today are a lot more sophisticated, and I think on the technical analysis side, they're definitely more sophisticated. We didn't have
Oh yeah.
trading. We didn't have trading view back then.
Yeah,
I
there was
mean,
no YouTube teaching people how to, read charts back then. Yeah.
no, man. I mean, you had matrix printers and stuff, and you're like, trying to figure things out or looking at TV screens and squinting and stuff. It's, you don't have, the retail investor didn't have the tools and the resources
Oh
that
yeah.
are
Yeah.
available today. So there are definitely differences, but overall market sentiment, I just feel that I don't want to say people have been lucky. I think people have ridden the bull market momentum for the last 12 years.
Gotcha. Gotcha. Awesome. Well, thanks, Frank, for that. And I feel like that was a great description of fundamental analysis and how to employ it, what to look for, and like we both agree on something like a Tesla. Good fundamentals there, great leader, numbers. The upcoming Coinbase public listing tomorrow, where its Q1 numbers beat its entire 2020 numbers. Um,
Ungodly numbers.
yeah, ungodly numbers. So 4xing, basically 4xing year over year. That would be amazing. But yeah, this was great, Frank. I hope to do it again. And with that, folks, this has been the Brave Money Podcast, and may the stock gods be with us.